Yeah, so guys, welcome back to my channel once again, and yeah, it's been a while. I've dropped video on my YouTube, um, trying to get off what has been happening in the market, the whole FTX saga, and the rest. Just decided to take some time off analysis. Yes, I'm back, and we're good to get back to the charts. So, over time, we've seen the market dropping heavily, um, unexpected price levels, um, a lot of people pointing to lower targets and the rest. But the most important thing is, what is the chart saying? What should you be doing? And what are you doing now? So I'll get right straight into this soon. This is the MVRV, which practically um, gives us a clear view of what is happening in the market and what we should be doing, what price has done in the past, and what will likely happen in the future. So let's look at the chart first. I would love to start with the Ichimoku first. I want you guys to pay attention to this. Very, very important. And like I said, over time, if you use Ichimoku, you would definitely get that clear signal of what is really happening in the market. So, though I don't like comparing previous charts to to predict future market, but this kind of setup has happened in the past, but I don't know what will happen in the future. But looking at the setup from 2014 before we got this bullish move and 2018 before we got this bullish move, we're kind of like seeing that kind of move around here. Okay, so what are we looking at? First thing first, take note of this. The um, everything and anything I'm sharing here is not intended as financial advice, okay? Only for educational purposes only, please. So the Ichimoku has a lot of metrics which we use to predict um, likely move, um, bullish move or bearish move to the future. So looking at this, we have the blue EMA, which is called the Chico span, and okay, let me adjust this so that you guys will see this clearly. Okay, this should be blue. Let's make it to be very clear blue. Okay, blue here. Um, this is the keygen. Should be. Let's make it red so that you guys will see it clearly. So lagging span should be green, which is the Chico span. Those are the basic metrics which we're going to use on this analysis. So we're using it to look at what is happening here. Might take some time, but definitely what we should be expecting. So what we should be expecting? The first thing we should be expecting is first thing first. You look at the cloud here, future cloud here, bearish from here down to this level. But what happens to span is maintain this move below the cloud. And take note of this weekly time frame, that's what I'm using here. Stayed below the cloud until we got that gradual breakout. So now look at what happened here. Price maintained this level of resistance and support for a bit of let's look at it. So starting from here is December 2017, we got that breakout around 2015 October. So took some time, let's say roughly a year or a year plus for this move, maintain this consolidation weekly time frame. So each and every candlestick you see here, uh, um, they open and close every week. Okay. So now we got that cloud gradually twisted from red to food grain. Now the same thing happened here. Price pushed down, maintained this level, and for how long? Maintained this level for how long? So okay, maintain this level from 2018 November until we got a break at around 2017, not up to a year. But what I'm trying to explain here is this. Um, since we'll be having the having, I think sometimes next 2 years, there will be some kind of price pushing a little bit lower if this level doesn't hold. But one of the most important things, we're going to get a long consolidation here. Okay, so let me use this MVRV to explain this clearly. So so you can see back here when we had um, the Polish run, we're looking at this level here to confirm our break towards the upside consolidation level, when to start DCA and when to stay out of the market. So whenever you see this um, blue line go inside this, sorry, this yellow line go inside this blue zone, you will find out that um, inside the consolidation zone, it's telling you the price is gradually getting or coming to an end of its bearish move. But one thing I found out is that it doesn't take 1, 2, 3, 4, or 6 months to just close like that. It takes longer. So you can see how it stayed long here. Same thing this level here from December. It stayed up until when December 2014, until it went outside it around 2015 October. Same thing happened here too as well. 2018 up to 2019. So we're seeing the same thing around here. This is 2022 June, and price is still inside that zone. Now, just because it is inside this zone doesn't mean, okay, we're going to just jump out immediately. No, that is not how it works. It's going to take some time to go like this, just like this, and just like this. So we could get that push even a little bit lower to this level, just like what happened here, and a little bit about what happened here. So we could just push lower a bit and consolidate before we get that push. So once we get that push higher, we will now pay attention to this, this, and this. So whenever you see any of this going into the red zone, let's say we'll bounce from here going back up, and you get this going, and it's a red flag for you to start closing your long position. So for now, we're looking at price maintaining this level for some time. So let's go back to the chart again, and let me remove the Ichimoku and look at some practical levels which price needs to hold. So first thing first, we're looking at price was supposed to hold at this level here, which is 2017 high, which was supposed to be um, a strong support, but we can see how it has broken the support. So if this level doesn't hold, of which we're actually seeing, let me go down to 3 days time frame. So we're seeing this descending triangle here. It's still in play. Descending triangle here. This actually confirmed the break to the downside. So if I'm to take this, or we're looking at the target of this descending triangle, I would say from here down to this level, we'll drag this and we'll drop it here. So if we're to look at the targets to the downside, we're looking at around 12 or 10k. But what are those things we still need to look out for, despite the fact that we're looking at 12 or 10k? Most importantly, we're looking at perfect support level, perfect support level. So one reason why I did not even pay close attention to this, because we only had this one um, resistance which formed future support, but now we're having one, two, three resistance. So if price pushes to this zone, which is around the 12K, it's I think it's a perfect level where it's good to look into. And I can box this in this way to say this zone, very important zone. This zone is very important, very, very important for anyone that wants to do DCA or thereabout. It's very, very important. You need to pay close attention to this zone. And yes, let's use the daily time frame. We want to point out there on the daily time frame. We're looking at the 200-day moving average and the weekly moving average. So whenever we get this crossing here, it signals a strong bearish move. Signals a strong bearish move. And the only time we've gotten that, let me see. Okay, no data to the back. So you can see how price has always bounced off the 200 weekly moving average. So for now, we want price to move above this two moving average before we start considering looking at upside. So for now, what I would say is don't let the market deceive you and say, okay, we're gonna push higher, we're gonna push higher, we're gonna get some form of invalidation here, pushing through. Maybe if even if we get this push to the upside, testing this level before coming down. But apart from that, and looking at this setup around here, I still think price would be rejected around here, but not really sure of what will happen. So we still have, you can see the perfect level here. See the perfect level here. Even if we break out through that level, another thing to pay attention to, there are some of the resistance ahead. This resistance here. So, but pay close attention to the higher time frame. They play out well compared to the lower time frame. Higher time frame will give a bigger picture of what is happening, what you should be expecting, what levels of support and resistance you should pay close attention to. So I think that is all for BTC. Not really much. Nothing much in BTC. So even if we get that push to the upside, we should pay attention to the bigger um, um, resistance, which was previously um, support here. So let's quickly look at ETH. Uh, yeah, so you can see how ETH did not even manage to hold this level. So let's remove this. Let's remove this, and let's go to weekly time frame. So if I'm to take ETH, if BTC were to dump heavily to that level of 12K, so we should be looking at ETH testing this level back again. So let me remove this. Let me remove this. So so we're looking at ETH holding at this level, but it did not. So if price pushes lower, we're looking at our first level here. We're looking at another level here again, which is very, very important. I don't see anything that would hold ETH once it falls below this 800, 871. I see nothing that would hold it from moving to this zone. So I say this zone is a perfect zone to keep an eye on. That is if it doesn't hold this level. So we need to be very careful of what we're doing now. If you're doing your DCA, use the higher time frame. Don't use the lower time frame. When you use higher time frame, it gives you a clear picture of what the whole chart is talking about. Okay. So I think that will be all for now. I'm back, and I would try my best to continue to update um analysis, short videos, drop short analysis, both on my Twitter and my Signal channel, and also my YouTube channel too as well. So guys, stay safe out there. Don't trade with caution, and don't take unnecessary trades. Okay. Happy trading and stay safe. Goodbye.